Hello, my name is Christopher Charlton. It's Sunday the 9th of May, 3 o'clock in the afternoon, and I'm here to give you the weekly report from Centre Asset Management on the markets. Well, it was a hell of a week last week in all markets and the currencies as well. We had the main winners of the week, the US dollar and the yen, and the losers, the euro, the pound and the commodity currencies. There was a hell of a lot going on. I mean, the European debt crisis seems to have not got any better, seems to be worsening. The UK elections came through, the results. China tightening. The sudden surcharge tax on mining profits from Australia. The oil spill, BP, and the stock market, the falls in the stock market and commodity markets. So it was quite a week. The main issue really was the flight to quality. And there we saw gold rising again above 1200 despite commodity prices falling, and US Treasuries rising strongly and the yields going from 3.7 to 3.4. As well as that, we saw the TED spread just ticking up now again. This could be a sign of further problems in the credit markets ahead. So if we look at let's start with the euro. Obviously, the debt problem continues, contagion concentrating on Portugal and Spain, but now moving over into Eastern Europe. And at the moment doesn't seem to be getting as it passed on the weekend, and we'll have to see whether that stabilizes the market a bit. Today is the regional elections in Germany, North Rhine-Westphalia. That'll be interesting to see whether Merkel loses the majority in the upper house. I don't know whether that will really affect the euro that much at the moment. But once the political situation is out of the way, maybe Merkel can concentrate a little bit more on the European one, and that because certainly Europe needs a bit of strong leadership. So we can see that the euro took a hit, certainly, well, since the middle of April, coming from 136 down to the low mid 120s. The question is here whether we may see a little bit of a retracement. I think we probably will. It's come probably far enough, and we may have a move back up towards 128, 130 area before resuming the downtrend. At the moment, the debt situation does not seem to have been resolved, and therefore the euro will stay under pressure. What was the other big loser was the pound, 3% down against the dollar, 5% down against the yen. Well, obviously the UK elections were the result of that, and the hung parliament. We still don't know what the situation will be today. It's an open game. It does look as if the Conservatives will probably form a minority government, but whatever scenario at the moment doesn't look very good. One situation was that the odds on a credit downgrade, they were really talking that if there's a coalition government, will increase from 10% to 50%. That is bearish on the pound. And are there any skeletons in the cupboard, like with Greece, with a new government coming in? Who knows? There is some rumours of that. Goldman Sachs visited Alistair Darling quite often at the end of last year. Obviously, if something like that came up, that would be a disaster for the pound. So at the moment, we remain bearish on the pound against the dollar, looking and keep our target at the 140 level. So apart from that, obviously the yen was a big gainer, and the commodity currencies were the losers. Here we can see that one of the main reasons the oil price was down nearly 13% in the week, actually just hit its, slipped just slightly below its 200-day moving average. I'm using the mouse there, you can see that. It was quite a critical level. We can see the same in copper, actually went down and held on its 200-day moving average. Probably we'll see a retracement back up this week as the market stabilizes, but maybe the damage has been done, and those levels are certainly ones to watch out for. This chart just gives an idea of the collapse in oil prices last week. We're actually below now the level at the beginning of the year. Pretty dramatic. The Australian dollar, obviously being a commodity currency, lost value against the yen here, dramatic fall. This was partly due to the mining tax, but more likely the tightening in China. And China seems to be seriously trying to put a top on the real estate market bubble and the stock market bubble, and they seem to be doing that quite well. Obviously, any slowdown in growth and demand from China is going to affect these currencies, and the Australian dollar will therefore be affected accordingly. So the dollar index, the dollar basically was the main benefactor through the week, and we can see it was a strong move here. Again, the mouse going up there. From technical analysis viewpoint, that actually we've probably completed a 5-wave move there. We could therefore see a retracement. It's gone very fast, very quickly. So be cautious on being long dollars in the short term here, or the beginning of the week. But the overall trend, we believe, remains dollar bullish for the time being. And the trend is your friend, as they say. So, apart from that, I just want to talk about the Greek situation and one of the big problems in Greece, which is the tax evasion. And there was an interesting article last week in the Herald Tribune which showed that in Greece you have tax return forms, like anywhere else, where there's a little box that you have to tick off which states whether you own a swimming pool or not. And in the affluent areas north of Athens, the returns were filed in, and well, actually, this picture just shows a couple of swimming pools. See, I just did that. There's a reason for that. It's because the actual tax returns were filed in, showed 324 people filed, said they did own swimming pools. Well, the tax authorities thought this is a little bit low, so they used satellite images to check that out to see if that was correct. And in fact, they came out with 16,974. I think that it sums up one of the major problems in Greece is the problems of tax evasion. In fact, it's estimated that if the government were to receive all the tax, they would get another 25 billion euros a year, and you probably therefore wouldn't even have a debt crisis at the moment. But it's it's a cultural issue. It comes really from the Greeks' mistrust of government, and that comes probably from being ruled by the Ottoman Empire for the last, well, for over 100 years. Therefore, keep your money under the bed, don't pay the government. And every part of Greek business, there is always a VAT or non-VAT. Do you pay, don't you pay? And there is a story of at the time of the Ottoman Empire, that the Greeks were told they had to pay their tax in wine, and they didn't really want to do that, so they decided to put pine resin into the wine and tell the Turks that the harvest was bad. Well, the Turks tasted this wine and said, well, this is so bad, you can have it. And the Greeks were stuck with having to either destroy their whole harvest or drink it. And for that reason, that's why Retsina has that sort of pine wood taste, and it's a matter of taste whether you like it or not. On that, I leave you, and I wish you a good week. Yamas.